Hello and welcome to the Genuine Learning Blog. My name is Melissa Galasso, and today we're going to talk about a proposed GASB update related to, and this is a swallowing of a term, subscription-based information technology arrangements, or SBITAs or SBITAs. I am so used to just calling this a cloud computing arrangement that this is a very long term for when you're hosting things in the cloud. But they wanted to be very specific about what they were talking about when they talked about hosting. They didn't want to use SaaS, software as a service. They didn't want to talk about current technologies. They wanted to be sort of focused, and so we get subscription-based information technology arrangements where we are paying a fee in order to be able to use something that someone else owns, right? So that's a high level. I'm going to dive into the actual definition shortly, but what is the accounting for this? And so this is a proposed GASB standard. All right, so a little bit about this. This was issued on May 13 of 2019. Comments are due August 23rd of 2019. And again, this is subscription-based information technology arrangements. It is project number 38. Currently, there is no explicit guidance in the GASB standards related to accounting or financial reporting guidance for these types of arrangements. However, FASB did address this topic in 2015 with ASU 2015-05, and so some people who are both FASB and GASB people have been analogizing 2015-05, and so as a result, they wanted to take a look at having GASB specific guidance in this area. So what are the objectives is to provide guidance on the accounting and financial reporting for subscription-based IT arrangements for government end users to eliminate the diversity that's existing in practice. So what is an SBITA or SBITA? An SBITA would be defined as a contract that conveys control of the right to use another party's, and a vendor, hardware, software, or both, and we're going to include including information technology infrastructure, or the underlying hardware or software, as specified in the contract for a period of time in an exchange or exchange-like transaction. That should sound really familiar to you, because that is almost verbatim the word for leases if you take out anything related to the IT world, right? So a lease is a contract that gives you the right to use another entity's non-financial asset. In this scenario, this would be potentially software as an intangible for a period of time in exchange like transaction. My goodness, sounds like a lease, and guess what? It's going to look a lot like a lease. So in this subscription-based IT, we're really focusing in on the right to use another party's hardware, software, or both, including their IT infrastructure, for a period of time. So everything is moving to the cloud, right? Very few things are kept on local servers anymore. And as a result, we have this subscription base, right? We sign up for a monthly or an annual fee for hosting, and most of them are longer than 1 year. And so as a result, they wanted to take a look at what could they do to provide accounting guidance. So in this update, the subscription term would include your non-cancelable right to use the underlying hardware or software, plus, this should sound familiar, periods covered by an option to extend or terminate if it's reasonably certain that they would exercise or reasonably certain that they would not exercise that termination. So those are the same concepts of a lease term applied to now what we call the subscription term. You're going to notice that GASB 87 has its all over here, right? Everything that isn't GASB 87 makes its way into this proposal. So as a result, if you have one of these subscription-based concepts, you would recognize a right to use subscription asset and a corresponding subscription liability. So we're going to treat it just like we would for a lease. And it's going to be accounted for just like a lease. So on the liability side, you're going to measure the present value of the subscription payments. The discount rate would be either the rate charged or the incremental borrowing rate if it's not readily determinable. And then once you have the liability on the books, you're going to use the effective interest rate method. You're going to recognize amortization of the discount as an outflow of resources. So very similar to the lease standard again. On the asset side, you're going to notice it starts with the liability. However, it also includes payments made before commencement and any what we call capitalizable implementation costs, which I'll get to in just a moment. In terms of subsequent measurement, once we have the asset on the books, we're just going to do a straight line method to get it off the books over the term. So that's why we have to consider those options to extend and options to terminate so that we get the asset amortization correct. So we talked about the fact that in the asset we could have other capitalizable, what we call implementation costs. FASB also just tackled this, and there's a lot of overlapping similarities with this one as well. If you're in the preliminary project stage, you're evaluating alternatives, determining technology, selecting a vendor, you're going to expense that. If you're in the implementation stage, then that's whatever it takes to get it placed into service. That is going to be capitalized as an addition to the subscription asset. So you're actually going to book it into the subscription asset, which was that third item that we listed. And then in the post-implementation or operation stage, this is your maintenance and your ongoing operations. Those are going to be expensed. However, they do clarify that, for example, training costs, regardless of the stage, is always going to be expensed. So even if you're getting training during the initial implementation, training costs are going to be expensed. So you do want to make sure that you're looking at these other activities and the nature of them, not just the project stage they're in. There would be, just like there is for leases, a short-term exception, and that's a maximum possible term of 12 months or less, including the option to extend, regardless of the probability of being exercised. That should feel pretty familiar as well, and those would just be outflows of resources. When are we thinking about this? Well, it's for fiscal years beginning after June 15 of 2021 and all reporting periods thereafter. Early adoption would be encouraged because GASB always encourages early adoption. So they're taking the guidance that they already have pretty much for leases, and they're applying it to cloud computing arrangements who are out of scope of the standard because GASB 87 only applies to assets that are non-financial assets, and they exclude explicitly intangible assets. So they're going to be addressing that here, and you'll notice we'll get that same right of use asset and liability, same treatment in terms of subsequent measurement, and it also follows FASB's ideas for what can be capitalized into the subscription asset and what cannot based on the phase of the implementation cost. So not the monthly or annual fees, but those upfront fees that you might incur to be able to get the process, get the technology up and running. So lots of fun things in here. So this is proposed. If you are interested, you have lots of time to comment. I want to thank you so much for joining me on the Genuine Learning blog, and I hope to see you on a future blog. Have a great day, guys. Bye-bye.